I would like welcome you, sir, and thank you for accepting PMS Bazaar's offer to give a interview for our investors for the next financial year. Thank you for being on board, sir.
Thank you, Akshara. Happy to be on this show here.
Mr. Anil Rego, who's the CEO and founder of Right Horizons, has found his interest in this investment industry since age of 17. So that's a very early stage, I must say. Hardly will be around 12th or doing 12th grade or something. So what?
Yes, I was.
So what was that connection point that you had to take this as a profession, sir?
Yeah, so of course, first it was an interest, in investments and stuff. I ended up walking across to a, equity broker office and starting off while I was a student. And this was, with money that I used to help my mother managing the home finances. A little bit I had, we've saved away. And yes, since then, I think the journey with investments, and I realized my passion for, the investment side, and started investing. Of course, from an early age, I think after taking a broker tip the first time, I decided never to ever take a broker tip again. So I said I should do my research and accordingly, actually start investing so that I have only myself to blame if I go wrong, or myself to pat on my back if I go right. So, and coming back to where I took it off as a profession, because after that I went on to do my CFA, PhD, BA, and I worked at Wipro for about 6-7 years. There I always, planned for a retirement and starting something on my own. Within 35, I did that about almost like 5 years earlier. I started Right Horizons. It was, where I felt, I'm able to help others achieve their goals, right? Just the way that I was able to achieve mine. And that was the mission to start off Right Horizons.
So that was more like an entrepreneurship in you.
Yes.
That made you start this.
Yes. So like I said, right from the time I started working from day one, I set out a plan for myself, so saying that this is how I'm going to retire and start something of my own. So I guess that entrepreneurial bug was, always there within me. And I think when the time was right, I said it's a good time to start.
So this would give people an idea to have a plan for retirement as well.
Yes. Yeah, so I think that's important because I keep telling people one of the 50% of maybe even achieving it, right, is putting down your plan, visualizing it, right, and then working towards it, right. So, and we cannot imagine the, impact of having a roadmap to what you want to do.
Yes.
So I think that's very important for people as well.
Yes, having a roadmap in life is actually a very useful one, I must say. So, with talking about that, so you're entering a new financial year now. So, what are your key learnings from the previous financial year that you want to carry to the next financial year? How do you roadmap the next financial year? Let me put that straight.
Yes. So, I think, you have good years where markets really run up. Okay. And then you have years to test your patience. So, this is probably one of them where, of course, the good part is markets didn't collapse like, let's say, the US, okay, Indian markets at least. At the same time, it never went up, and it comes to a point where somebody looks at an 18 months return and said, "I've gone nowhere." So that's a time where, with time, people get a little frustrated, and it's also a period where even for fund managers, it's a very challenging time, right? Which is where you'll find a whole lot of underperformance across, because some themes that did well in the past, were not continuing to do well. So you may have done very well, and then suddenly, it begins to hurt you. So I guess those are some of the changes that, how, and that is something that, for me, I look at market cycles, and, when I was uncomfortable in, with market valuations in almost October, in that quarter of October to December 2019, right? And so we ended up de-risking because valuations were very high, right? And so to some extent, it was good for us. We were able to see that, and we de-risked. So like even when COVID came, we did sort of really well. So coming back, to the learnings, I think it's about continuing to be nimble, watch markets, look at the basics, valuations, okay, and I think it's all about sticking to the basics and continuing to do so. But I think what I like to do always, because we are very process driven, right? And that's also part of, I think, my Wipro stint sort of got that process into me. And that is something which I also realized when I studied other funds, when before we are starting our PMS, I realized that process, helps deliver consistent returns. So that is something that we've continued to do. But I do say, let's say, a yearly check, right? To say, okay, how can I improve this further? Right. So there is those small tweaks around that, one needs to continue to keep looking at and doing. And I think it's about, if you have a bit of a learning attitude, I think there's always something to take forward into the next year.
Yes, it definitely keep your basics very strong. So you need to be in touch with that. That's very true words from you, sir. So moving on, about when you talk about those global matters, so it's completely volatile and very uncertain. And do you think that the impact of the global geopolitical things, which is completely uncertain now, is going to have effect in our D Street? And how do you see that next financial year coming up with us?
Yeah, see, today maybe it's geopolitical as well, and it's as well economic, right? If you go back and see, let's say, the US, you have a bit of a banking crisis out there. Okay, so there are a lot of things happening. China had its own pains. Europe is has its own, right? And so there's a lot of churn happening around this. There's a lot of difficult times and inflection points that are being seen at a global scale, right? So that definitely is something which has been there as an overhang. In fact, while sort of the US came down sharply, like I said, right, India was lucky not to fall as much, and we probably fell down among the least out there. So that's been a good thing. Of course, I've been a little negative about the US, and I continue to be so. I think data has shown that whoever is the leader of a decade, underperforms probably for 1 or 2 decades at least. Okay, we saw Japan going beyond that 2 decades. China is now in the second decade. Before the US, it was the leader. So I'm saying, of course, so if I go by that perspective, then yes, we have a bit of an issue out there, and it's longer one. But at the same time, I'm a lot bullish on India. And I'll give you the reason why as well, because sometimes they say, if US, sneezes, everybody catches a cold and stuff like that. So that is something which, is some at the back of the mind. But what I believe is there are also these global cycles that play out, right? So the US saw a huge leveraging cycle, and that sort of also causes the issues that come from it, in the future. Now, India actually saw that in the last decade, right? Where we saw almost like 3 to 4 AAA rated companies go off, into default grade and stuff like that. So, and the banks got thrashed for every time they reported NPA numbers higher and stuff. So we saw a little bit of a down there. At the same time now, because we saw that in the last decade, we're probably ready for a leveraging cycle, right? So I think India will do well. Also, when I look at in comparison with others, a lot of the policies, like frameworks, now will start to come into play. So I think India is likely to do very well for this decade, and one hopes that we will be the leader of this decade. So I'm not so concerned with sort of the geopolitical and maybe the global, financial stuff, what is happening. But yes, if it deepens, if it, some of this goes off into a deeper, say, banking crisis, which impacts the larger banks, which one doesn't expect, right? But for some reason, it snowballs into something larger, then yes, we have point to be concerned. But I am definitely reasonably bullish about it.
So you're very optimistic about India.
Yep.
That's nice. So I just got struck when you said that when US sneezes, other countries catch cold. So with that statement, if I could relate this, our Indian rupee had several low times in previous financial year. So against US dollar getting more strengthening with other currencies. So do you think this trend will follow up, or do you think there's a gap?
Yeah, see, I think the rupee dollar, and especially if you ask any NRI, right, he will say, "Oh, the rupee always depreciates," right? And that's something that is there on their mind all the time, right? But actually, if you go back and look at data, it's interesting, right from if you went to 2001, 2000, you found the rupee depreciate, and then post the global crisis, it ended up appreciating. Again, the same thing repeated. And if you went back to see that, after it appreciated, we were almost back to, the 2001 sort of days and stuff like that. And again, post 2008, there was a bit of an appreciation, reasonable appreciation in the sort of rupee before we saw the depreciation again. So I'm saying that wherever there's a global crisis and there's a global downturn that we are looking at right now, okay, for the last 1 year, you would end up seeing that post that the rupee actually appreciates, okay. And it's interesting. I also track some of these closely, and the rupee, if you look at it, almost from for the last 6 months, we are in a range. Okay, we have not gone past 83, right? So somewhere, it felt like we were going to hit 85. It went up, it appreciated again, then came back again. So 2-3 times it went closer to 83, and it shows that despite a lot of global developments, despite some of the banking crisis overseas and stuff like that, we still did not depreciate, and we continue to show some bit of strength out there. Now, yes, if the rupee say goes above 83 and depreciates beyond that, then we will see probably a rally. But the point I'm making is the rupee moves in spurts, right? So you'll find suddenly it'll move, from 75 to say 83, right? So that's how it'll move, and then it'll stay there for a long period of time. Then it'll appreciate again. That also is a bit of a spurt. Then possibly you'll see one more depreciation. But I think as India's inflation, also comes down relative to other countries, right? So you'll find a purchasing power parity. You'll find that our depreciation of the rupee will sort of continue to come down in the long term. But in the short, but I'm saying in this decade, I definitely expect the rupee to actually appreciate.
Oh, okay. That was a new thing to carry today. And when you talk about this Fed, the word Fed is threatening investors now, actually. So now RBI is likely to increase our rate hikes. Again, the rate hikes are going to continue. So, and because inflation is right above the tolerance, everyone knows that now. So, do you think this rate hikes have an end, at least next financial year? Can we expect that? Or do you think it's going to continue?
Yeah, so see, I think like equity markets, debt markets also, I believe, are predicted, right? So, and when I'm talking about debt markets, I'm saying, what are the government, say, 10-year government bond yield, for example. You can look at different period points. Okay, but let's take the 10-year GSEC, which is the most commonly known, right? So, what is interesting if you look at, you found yields spike up, okay, but in the last 3 months, despite the rate hikes by the central bank, right, both in India as interesting and more interestingly in the US, right, US in fact almost for 6 months. It's not even just 3 months. For 6 months, you have not found the yields go up despite the central banks increasing interest rates, right? So if I go by that logic, that the market is always right, and there's that somehow there's that wisdom to differentiate, right? So I would believe that also from that aspect, I believe that we are closer to the end. Okay. Also, I think from looking at other parameters, like if you look at inflation has cooled off, there is some bit of uncertainty and there's some bit of weakness in the US banking system. Globally as well, there are some bit of jitters. So I think in a situation like this, I don't expect global central banks to be very aggressive. Okay, one must keep in mind they are always behind the curve. Okay, so which is why first the yield spiked, and then after that central banks increased rates. Initially, they were, including the US, was saying that no, we are not going to, and we don't think it's going to impact, etc. But subsequently, the Fed did, increase interest rates substantially. I'm saying similarly, I think from here, I believe we are closer to the end, maybe a 0.225% here or there. Okay, but from here, at least also looking at the yields and what the debt market is saying, right? I think we are sort of in a good point where possibly, hopefully, interest rates have either peaked or just about peaking.
So that's a whole of optimistic view on India. So,
yes.
So are you biased, or it's a very true opinion from your heart?
No, so for me, I look at data, right? And so, I look at charts, I look at data. So when I look at it, I see the rupee, I see where it is, and that's what it's showing, right? Yes, there is a view which is slightly more emanating from a fundamental side that yes, the whole lot of things have happened in the decade. You had a deleveraging cycle, it's happened now. You should see a leveraging cycle. The whole initiatives of the government, the digitization, the entrepreneurship, and if you see again the Indian demographics, right? If you see a lot of the data points, we are very, very well placed versus others. If you see the demographics of most other countries are extremely negative, right from Japan to China to even the US is sort of turning a little now, right? So I think we are in a sweet spot. So if I look at fundamental data as well, yes, one is bullish, and at the same time, I also, if you saw, in September to December of 2019, we took cash call. We sort of moved out of financials, into pharma and consumer. So we did a lot of things, which is why when the COVID fall happened, we were much better off. And my view was, if it was not COVID, it was something else, because markets sometimes need a reason to correct because they were overvalued, right? So one is willing to look at it, but at a time like this, when market is already down, when customers and a lot of investors come to me and are very nervous, right? I keep telling them, the more nervous you are, we are probably closer to the end of the down. Right? So I'm a contrarian, yes, and but I look at data as well, and I don't hesitate to also call out a negative cycle, right? So if I think it is there, yes, one will come back and also say that.
Okay. So with saying that, of course, your India business leader, Super Value Fund, Minerva, India Unreserved, FlexiCap, all of them have given good alpha in spite of market being very volatile. So can you share with us, like, what was the secret mantra that you followed for all these strategies that give it a good alpha?
Yeah, I think, like I said, what has been really, really important to us is our process and a disciplined investing cycle, right? So, and at each point of time, when we think that markets are sort of overvalued, we sort of come back in and pull back. Even, of course, on certain strategies which give us a little bit of flexibility, we may, without churning too much, right? We may sort of look to manage risk a little more actively out there. So I think what has really worked for us, like I said, is just our process and being disciplined in what we are doing, using quantitative data, right, to make decisions. So see, if I tell you I'm bullish about it, I have to have, and I can give you some 8 charts to substantiate that, right? So I have to look at data, and that's true of everybody in the organization and the PMS team, right? We look at data and take decisions based on data rather than emotions, because that then actually you're able to make the right decisions and also look at a contrarian opportunities. Because if you see, there are 2 ways. One is to catch the momentum, and you'll probably grow at a certain rate, but the great gain comes if you are able to catch a contrarian cycle.
Okay. So, like, right horizons into everything: large cap, small cap, multi cap, flexi cap. Is it right horizons into everything? So, if investor comes to you at this volatile market and if he wants to enter the market, so what strategy you would pitch them?
No, so if you tell me if he's entering the market, then I'll always be conservative. Okay. Right? So I'll still tell them, okay, you know what, we even have a hybrid, you miss that out. Okay. So because our whole point is I want to give the choice to the investor, right? So especially that was my perspective myself as an investor. There were points when I actually wanted a pure infrastructure fund, right? But then all the infrastructure funds had everything but infrastructure, right? Because infrastructure had a bad cycle, and then even communications and everything else, telecom becomes infrastructure, right? So that is something which is that we wanted to give various options to the clients out there. So what do I suggest for somebody who's really starting out, not even exposed to equities? Then yes, hybrid is always the best way to go, right? But if you have some exposure to markets, and let me say for a relatively more evolved investor, I definitely would say at this point of time, so contra call again, mid and small caps. Okay. So people will not want to look at them, but actually, so when we look at relative valuations, again, like I said, we always look at data, right? When you look at relative valuations and look at the chart, right, it has come to a point where I think it's time for mid and small caps to actually outperform large caps. Okay, so that is something which I believe so. But for, let's say, a stable investor who doesn't want too much of risk, then say we have the flexi cap strategy, which is an all-weather one, so you don't have to bother. We will break our head a little bit. At the same time, we will not go completely extreme to mid and small caps. We will not go completely extreme to large caps. And for evolved investors, like I said, RH super value or even an RH underserved. Super value is a mid and small cap, and underserved is a small cap strategy.
Okay. So with that, we come to the end of this. We have one more question to go, but then we come to the end of the session. So, what do you think as the USP of Right Horizons? That is going to differentiate Right Horizons from other AMCs out there.
Yeah. So I like I said, process was and some of those are one of it, but I think it's in how we like to build in everything block by block, right? And we are conservative. And we like to keep the client's interest in mind, right? So an example is, a lot of people, a lot of distribution companies came to me and said, why not do an AIS, right? And we know there was upfronting and so all things like that. I said, I don't want to do that. I don't mind growing slower as an organization, right? But one wants to do the things right, because where we do some of it's at the impact of the client, right? So I think what we really like to do is build sort of long-term relationships with the client and create a win-win both for us and our client. And I think it'll be a little more hard work, but I believe there's no reason why both of us cannot make money, right? And both of us cannot do well together. So I think that's a bit of a philosophy that we don't mind going slower, but doing things the right way.
So you invest more in the basement than building, because you feel the building should be strong if the basement is strong.
Yeah. So the foundation, as I may say, right? So in fact, we've taken our whole PMS to outside distributors now after almost 12 years.
Okay.
So it was a very strong foundation. Yes. Right? And it's about, because I also wanted to see, when you're handling other people's money, do it in a block scalable way. There's so many learnings that sort of we've got. We know what not to do as much as what to do. Okay, so and I think that journey, that learnings, I think has helped.
I think that must be the USP of Right Horizon, because people will, you categorize what not to do first, and then you do what to do. I think that's the biggest USP of Right Horizon, which that differentiate it from other AMCs. So thank you. With that, we've come to the end of the session. Thank you for giving us time for an interview. And this would give an investor a clear picture of how to go about the next promotion. Thank you.
Yeah, thank you, Akshara. It was good talking to you and sharing my insights.
Thank you.